Afternoon, all. How we doing? Afternoon, Neo, Baggy, Cat, Alex. How we doing? US dollar, bullish again. Afternoon, Peter. Another big move on the US dollar off the course, the PCE. Only a 0.4, but we've had quite a strong reaction to that. So big moves. We've got University of Michigan at 3, so we'll see what happens there. But I don't think the market's going to hang around for the Michigan sentiment. So all the US dollar pairs pushed down off the news, or rather the US dollar pushed, so everything against the US dollar pushed down off the news. But not sure if it's going to be a sustained move or not, because it pulled back very, very, very quick, although it is just dropping again now. So we'll see what happens with that one. XRupdate.news. Afternoon. How are we doing? Afternoon, Marco Virginia. So quick overview of today. Not a lot happened really today. Pretty much the same as we were this morning. So ADR reversals has managed to bank 0.3%. We did 0.57 drawdown control yesterday, sitting in 5%. DD. US dollar yen's the only thing that's in a bit of drawdown, which is 1.5%. Not going anywhere, just sideways. So a bit stuck this week, aren't we? H1 5.2%, done 0.12 drawdown. Nothing worrisome there at all. Nothing even over 1%. H4 is up to 8% drawdown. 0.43 banked as a negative drawdown today, and 177 yesterday. That US dollar yen is the main contributor, but we've got a few other things creeping up now. The pound New Zealand a little bit. Actually, that's it. Yeah, no. So it's just the US dollar yen again. Stuck. And H1 hedging going into drawdown 15.3, 0.09 banked. So again, US dollar yen, Euro US dollar, and Swiss yen. And obviously Aussie US dollar as well. So there's a few bits going into drawdown, but this regularly sits, 5 to 20% of drawdown is quite normal for that, because it's constantly in drawdown. So nothing banked today. Bit of a crap day. Up massively on the month. So the month's banked 25, 35, 38, 48, 58, 68%. 69%, 70, something like that. So good month, but nothing this week. Afternoon, Jerry. Deresh. Afternoon, Brian. Ready for your whatever it is news, excluding the aircraft? So nothing else this afternoon apart from University of Michigan, which is the revised sentiment. So I wouldn't expect the market to hang around for that. So we should get a decent move. This morning, we've not had a massive amount of news apart from the PCE. There's nothing else come out this morning at all, really, news-wise. So a bit of a flat day again. So ADRs today so far, none. We haven't hit ADR yet. Yeah, it's just one of those days today. It's just gone up and down, up and down. So we'll watch the open. We'll trade the indices, but I'm not expecting a particularly long session today. So I'm just going to do the opening range breakout. There's no analysis to do on ADRs because there aren't any. We covered all the RSI extensions this morning. And all we've done today, literally with pretty much everything, is move up, move down. So we're basically where we were this morning, pretty much across the board. So closed Aussie yen out today. That one closed. That's RSI extension. So that's a nice little TP. But there's not a lot moving. It's really, really dead. We are sideways still. So a little bit more weakness in the yens, but market's really undecided. So we have broken out that pound yen as well. So we are potentially starting another leg up on the pound yen. Just an accumulation off of that move, but there's nothing There's nothing exciting happening at the moment. We are sitting sideways. It's a boring week. Euro New Zealand, we'll have a look at that one. How long we got? 2 minutes. We'll have a look at Euro New Zealand. So Euro New Zealand in a sell at the minute. Not gone anywhere today, so we're just sideways up here. So New Zealand dollar, all the New Zealand dollars, obviously we're waiting for some kind of pullback on the drop of the New Zealand dollar at some point, but not today. We're back where we started today. So all we've done, literally, that's where we opened. We had a little rally. We dropped a little bit. We've pushed back up. We're back where we started. So same as this morning. JR, sorry, I'm an avid listener. I am on screen as well, you know. Don't want to stray off topic, but if you get a chance, can you provide a brief analogy of what a propulsion gap is? I can. We'll just do the open this morning, and then I'll look at that. There's lots of videos on YouTube, actually. If you want to know what propulsion gaps are, if you go onto the website, onto the YouTube channel, there is a bit about it in there. There is propulsion gaps explained here. This is probably the video you want. Go and watch this video. Go away, whoever you are. So this video basically explains what propulsion gaps are, also known as 1, 2, 3 gaps, also known as wide range bars. I can quickly cover it though. In a minute. Right, let's watch the open. So we got 25 seconds. So I've got the EA on. I've been mucking about with the EA today. I'm quietly hopeful we might trigger some orders. I'm also possibly expecting this all to go Pete Tong. So we'll see what happens. Okay, there's the opens. All in, all working. Excellent. DAX is obviously not trading because that trades in the morning. So there's your pre-market 5-minute opening ranges in. So we have gone long on that one. We didn't cancel the stops off. We've gone long there. We didn't cancel the stops. We've gone short there. We didn't cancel the stops. I didn't re-download the updated version of the EA. Okay, let me just quickly manually do these because, or should I leave them running? No, because it's going to double up the orders, isn't it? Oh, which version have I got on here? I'm just going to let that run. I'm not sure which version I've got on here. I've been testing some other variations of this strategy using pending orders as well, instead of orders being placed straight away, which I've only just started to test, and I can't remember which version I've put on here, and I've just recompiled it, so I've no idea what this is trading. We'll see what happens. Might make money, might not. This is taking all sorts of orders. This has all gone wrong today. Forget this. So a bit of a whipsaw today. So you are short on the Dow on the pre-market, and kind of gathered in long and stopped out on the DAC, on the NASDAQ. And it looks like that wants to go short. That stopped out as well. Now it's flipped long. This is a real whipsaw today, isn't it? Look at this. S&P's gone long. I've no idea what this is doing. We'll see what happens. We'll just manually watch. Dureska, afternoon. Andrew, our favourite pair as usual, UJ. Yeah, we'll have a look at UJ. Is there a new version to download in MQL5? Nope. Nothing new. That hasn't flipped long either, has it? For some reason. What the hell have I done here? Update this. 1:20. Oh my God, I've been working on this until about 20 past 2. So before I came on, this is about an hour old. This is going to be buggy as hell. Let's see what it does. It might make money. It might not. Okay, Dow's broken to the upside. S&P's broken to the upside. And so has the NASDAQ. The NASDAQ's gone without orders. But we know what we're doing. So longs today, but you will have been stopped out on shorts, possibly double-ended stopped out as well. We'll have a look at the P&L in a minute and see what that did. But that's hit just about hit TP, 1.5 hour. Trying to. Doesn't seem to be any direction at the moment, does there? Really struggling to get out of the gates. They might be waiting for Michigan. Don't know. It is Friday afternoon, so there we go. So we've hit TP on the S&P. That's 1.5 hour hit. Hit TP on the Dow. NASDAQ would have been TP if it had taken a trade. Right, so we'll see if we can get a runner. See if we can get a 5-hour runner. I'm going to close those off. So we've got $4,000 open profit. No idea what that banked. Where are we? $10. That was this morning's trade, so it starts from there, doesn't it? So 1, 2, 3, 4, 5, 6 grand down, plus 1,500, plus 3. If we get these runners, it'll be profitable anyway. But missed $800 profit on that TP as well. Looks like there's not a lot of strength in the market at the moment. Little bit whippy. Let's have a quick look at potential targets today. So Dow. Dow today. So we've broken out to the upside, obviously, as you can see. So if we're going to run to the upside, we've got this propulsion gap up here, which is above ADR today, and we've got that weekly support, which potentially could turn into resistance. So we've got resistance about 3/4 of an ADR and then 125 ADR if it's going to run to the upside. We are obviously in the middle of a big down move. This is the 4th down day on the trot. Yesterday was the first pause that we've had. So there is a potential that today is going to just pull back for a new leg down. So that would have stopped out. That Dow. So that stopped out in profit. That one stopped out in profit too. NASDAQ is still looking like that wants to run. So we basically just run in straight into yesterday's high, basically, and rejected that on the Dow. So downside on the Dow, if we are going to run, there's literally anywhere, basically. But this old low down here is 175 ADR. So apart from yesterday's low, which is around about ADR, there's nothing really to stop us until we get down to 175. So see where this goes today. I'm not expecting it to be a big runner today because it is Friday, and we're coming out of a day's worth of consolidation. So the best case scenario, I think, is we probably push up somewhere into here and then find some rejection and come back down. So I'm not expecting big moves off of it, but we'll see what happens. NASDAQ, that one, we are out at new highs. So the NASDAQ's rallying a lot. The NASDAQ's the real odd one out at the moment. So we've got this big bull run on the NASDAQ, which is continuing. When you look at the other indices, the Dow, we're going bear. S&P, we're completely range bound and sideways. So the NASDAQ stocks, all the tech stocks, are doing very, very well, broken out to new highs. So the tech stocks look like they're back in a bull market. The rest of the stocks really, really struggling at the moment. So NASDAQ obviously is out at new highs. We haven't had this sort of area for months. So sky's the limit. This thing can go as far as it wants to today. So we'll see what happens. But at the minute, that's obviously broken high. The Dow is inside bar on the 5 minute. So there's your 5 minute opening range. So if you're going to take the 5 minute ORB, there we are. 5 minute ORB on the NASDAQ's already gone long. So we'll see where those go. Need everything to revert back to Sunday open. That'd be nice, wouldn't it? Yeah. So if we get back, yeah, if everything was just to pop up there, that'd be lovely. Bear in mind that's got to do about 400 ADR to get back to Sunday zone, but unlikely. So we will see what happens today. But so yeah, no ADRs to look at today. RSI extensions, the 4 hours, most of the 4 hours we looked at today have all come out of extension. So there's quite a few of the Aussies on the 4 hour, which are just kind of popped back down, although they are starting to push back up again. As I say, today really is quite swingy. There's been quite a lot of movement today, but no actual direction. So we've had quite a lot of up down, but no, we haven't got anywhere. So we'll see where we go this afternoon in the New York session. But I would expect we'll probably stay pretty much where we are today. So ADRs are flat. RSIs at the moment, we've got one on the hourly, which is the pound yen. So the pound yen's obviously broken out of this high finally. So we've been sitting there now for 6 days sideways. I think it's 6 days, is it? 6, 7 days sideways. Finally got that break today. So all the yen pairs still got a little bit of weakness on them. Not massive, but we've had some decent movement on the pound, and obviously it's coming down now against the Canadian dollar, that one. But we've had some decent movement on the pound, and the weakness of the yen means the pound yen's got the most traction today, but really not going particularly far. So that's just about extended on the RSI. I'd want it a bit higher if I was going to get into short on that. But if you look at where we're potentially going with this one, on the 4 hour, we're out the top now. So this high that we had and this accumulation that we were stuck at was this high. So we tapped into it, rejected it, came back up, accumulated at it. Now we've broken. So this thing could go absolutely anywhere to the upside now. So it is in a bull trend. So it's officially counter trend now. We're up at like highs we haven't been to for quite a while. So a lot of these yens are getting a little bit out of hand. And I think the Bank of Japan at some point soon will have enough of it and they will pump the yen and we'll get a big drop on these. But at the moment, that's a nice extension to the upside, not massively extended, but that's your only hourly you've got. 4 hourlies, we've still got the yens, the other yens. So the Swiss yen, that one's extended to the upside. Again, we didn't get that pullback. So all we did was little flag and then break on the Swiss yen. And again, broken out of that high. We thought we might get a rejection off of that, but we didn't. So that's still an entry short. And obviously that's why the 4 hour RSI mean reversion account is sitting in that at the moment. There's obviously a lot of exposure on the New Zealand dollar, and that one is obviously dragged down, and same with the US. The US is pumping. So with these yens, we need some US dollar weakness basically to give the market a chance to drive into the yen and the Swissy. We're not getting it. So that news that came out today obviously drove the US dollar a little bit more, which has obviously weakened the yen again. So waiting on that one still. Euro New Zealand, that's still extended to the upside. We look like we were starting to drop today, but again, it looks like potentially a flag break. At the moment, though, we're probably going to go into an accumulation. So there is the chance, as I said, of these New Zealand dollars rallying again into next week. So we'll be looking at other levels. So that high there, propulsion gaps, monthly high is obviously miles away. There's no way it's getting there without a pause. Certainly not going to do that again, is it? So just waiting for that mean reversion. There's only 2 positions on that one at the moment on Euro New Zealand, but that's expected to keep rallying the euro. So we need some strength in that New Zealand dollar. Pound New Zealand is very much the same. Obviously, we've had fairly strong pound. We've tapped into that monthly resistance, which we looked at this morning. We broke back down very nicely, got back to break even, and it's rallied back up into the monthly high again. So potentially this is looking like a good double top M pattern reversal, and then back down into that area there, which is 125 ADR to the downside at the moment. But again, stuck. Everything's just stuck. It's all, you know, there's just no movement. After the New Zealand dollar rallies, we are just stuck on everything at the minute. So same with New Zealand dollar CAD. Started to rally, dropping again. Basically, Canadian dollar rallying with the US dollar, driving New Zealand CAD down. 2 positions on that on the hourly. Everything's well within reach. Nothing's in massive drawdown or anything. It's just nothing's moving. So hard to bank. New Zealand dollar Swiss still extended and embedded down there. Again, sideways. Lots of wicks everywhere at the moment. Off of that support. Looking for a push back up into there, potentially watching that level. So it's all the same as this morning, basically. New Zealand dollar, US dollar, still extended. Again, all these potentially looking like they could be W pattern reversals, M pattern reversals. So we are starting to see some bulls entering back into the market and then some reversions starting. But nothing's got underway today. And US dollar yen, obviously, this is a much bigger squeeze. So this one, again, we looked at this morning. It's got nowhere to go. So that high there, after the initial propulsion move, where we kind of went into that accumulation and pushed down, they retested that area, and since then we haven't touched it. So that's around about 250 ADR from where we are at the moment. We are well extended away from the 24. We're really extended and embedded there. We've got divergence on the RSI. Everything's going short for it, but we keep getting positive news on the US, which is just rallying it at the moment. So just waiting for somebody to talk the US down. And obviously, with what's going on with the debt thing at the minute, that could be absolutely any time. Fed fund rate 508, May 25th unchanged. That's fine. I was looking at the Fed thing today, the Fed Watch. Pretty good website if you want to go and check it out. Just gives you a forecast as to what the Fed's going to do. It's always put through Financial Juice, which is why I don't bother looking at it, because when it updates, they update us. So, yeah. Looking like we might get one more increase on the US dollar, but touch and go. So it's difficult to tell whether or not we're going to get this continuation on this US. It might well just continue to rally for another week or so, but we will see. But that's it. That's all we got on those, really. Nothing else exciting there. Dow and NASDAQ all rallying. Everything's rallying to the upside. That would have been a TP. Look, so that was a TP, and that was a full TP as well. So that would have been $3,250 profit if the trades had triggered on it. Trailing stops again. Look, trailing stops took me out. All hit TP. Trailing stop took out. Hit TP. 369. Just over 10 grand there. Again today. But didn't trigger because I've been mucking about with the EA. And I use trailing stops. Trailing stops. Lee, do your EA's indicators need your continual support? Will they go tits up if you don't support them? No, not as far as I'm aware. The only time they'll go wrong is if MetaQuotes release some newfangled update for MetaTrader that breaks everything. If you don't use MT5, you'll never experience that problem because MT4 just works. But if you have MT5, it regularly goes wrong. Don't use it. But no, I mean, yeah, I mean, if I was to disappear, at some point, yeah, their software will change and the indicators won't, obviously. I'm not planning to disappear, and they're not planning to update. The original market reversal alerts indicators now 4 years old. Never updated it. Doesn't need it. It just works. So it's unlikely, very unlikely. Spiffing afternoon, Steve. Spiffing afternoon to you too. Right, so all your opening range breakouts to the upside have all gone very well today. All the pre-market ORBs anyway. Your 5-minute ORBs, you are 1-to-1 on the 5-minute ORBs at least. So yeah, all good breakouts today. Really got to figure out what I've done with that EA anyway. So that propulsion gaps. If there's any other pairs you want to look at, let me know. I'll look at them, but there's not an awful lot to look at. Somebody wanted to look at something, didn't they? US dollar yen, wasn't it? Oh, yeah, we just looked at US dollar yen because it is extended on the 4 hour. So yeah, extended, not quite extended on the hourly. Got divergence again there, look. RSI divergence, bearish. We've had RSI divergence on this. No, that's not. That's kind of up, isn't it? But yeah, US dollar's just rallying at the minute. Not particularly strong though. Look at it. I mean, this is not a huge reaction to that news at all. If you look at it on the 4 hour, we're kind of inside bar look still. It's just Christmas trees. Red, green, red, green. That's not right, is it? Green, red. Other way around. So yeah, sideways today. Just rubbish. So propulsion gaps. So all propulsion gaps are basically large market orders. So this is basically a big candle, which is usually way bigger than all the preceding candles. And it's basically the banks and institutions starting a move, driving the market in a direction. So when you get a propulsion gap, typically what tends to happen is one of two things. Either you get the propulsion gap and then it immediately drives away from it, or you get the propulsion gap and it comes and retests it and then gets driven away from it, because there's such a large volume of sell orders going in there. The market rarely can come straight back and fill that gap. Yeah, so we get a push away. So that's all propulsion gaps are, is literally large candlesticks. Propulsion candles, impulse candles. They're called all sorts of things. The gap is the bit left where you have a 3 candle pattern. So you have one candle, which has got the low and the high. The second candle, which has got a high, obviously, and a low. And then the third candle, whatever that candle does with its high, if it doesn't push all the way back up to the high of the previous candle, that is the propulsion gap. So it's a 3 candle pattern. Candle 1, candle 2, which is where the gap is, and then candle 3 is where we didn't trade all the way back up. So the idea and the theory behind it is you get a large push by the banks. The buyers then try to push back against them, and the sellers that started the move go, nope, we want to go short, and they push them away. That area there, you'll have what's called unfinished business, which is where the people that got run over, the institutions that got run over, will be offside and they will have negative balance on their books. They will try to get back to this area. So what you find a lot of the time is these act as magnets, which is why when you come out and look at a chart, you find that propulsion gaps always get filled. Not always, but the vast majority of the time, the market will always trade back to a propulsion gap. So they act as perfect targets for us to use. So right now, there's a hell of a lot of targets to the upside where there's offside unfinished business. There's also some down here. So if this comes all the way down to here, there's literally no targets to the downside, but there's a lot of places that the market will want to get back to at some point. So that's all they are, literally, is large institutional orders. And these institutional orders can or cannot be filled. It's entirely up to the market. So you will find on some instruments, if you look at this, for example, CAD Swiss, we've got propulsion gaps all the way here from the beginning of March. We never got anywhere near them. And the market just tanked and tanked and tanked and tanked and tanked. After a period of time, it will start to retrace back towards them, but it doesn't mean it's always going to get to them. You're going to get basically people caught offside, and it's what the market calls a long or a short squeeze. Those people get out of those orders and they make losses. When I say people, I mean institutions. Everybody in trading, whether you're a huge multinational top 10 bank, a hedge fund, a pension fund, or a retail trader, they all take losses. And they will be realized losses, but they're what's called unfinished business, basically. So you never know whether they're going to get filled. A lot of the time they do, but the best way to use them is as a guide as to where price is going to get to. So if you've got propulsion gaps and propulsion targets within an ADR, within an average daily range, they're easy to hit, basically, if there is a buy or a sell rally in your direction. But there are also areas where you will find you get bounces. So I'm just trying to find a decent one that's got a bounce. There, probably. So here we had a propulsion move. So the best propulsion gaps are the ones that come after an accumulation. So what we're looking for is the banks to accumulate a book, which is basically where what we call a range or sideways movement, basically. So what they're doing is they're moving the market up and down, up and down, up and down, assimilating orders, basically, accumulating orders, ready to drive the market in one direction or the other. So when they've done the accumulation, they will have either a positive or a negative balance on their books. And depending which way that is, they will drive the market in that direction to make money. And then when they've done that, they will then pull back as they take profit. So we never know when you get an accumulation whether you're going to break to the upside or the downside, which is why you get failed breakouts. So with these, what often happens is if the market starts a move to the downside and it has a target, let's say, for example, that's the propulsion gap. So you've got an accumulation break. So the market's gone short. The banks have gone short. If their target is here, for example, yeah, and they got pushed down and they're on their way to their target and they didn't quite get to it, what will happen often is the market will push back the other way, i.e. the participants that got caught offside in this gap. They'll push it back into the propulsion gap, and then the guys that started this move will add to their positions to drive it back down till they get to their target. Then they take profit. So that's all they are. They're literally a visual way to see large market orders. Large market orders. There's a perfect example, actually. Look. So there's the propulsion gap. Initial move. We pushed up. They said, no, we're short. Okay, brilliant. We really want to go long. No, we're short. Okay. Came back up to it. Finish business. Right, now where should we go? Accumulate again. Wait for the next break. Yeah. So that's basically all it is that's how the market moves. It's large institutional orders, and these are billions, millions. To create a propulsion gap of that size, the banks and institutions will be transacting tens of millions to get one candle on the hourly chart, that sort of size, yeah? You know, if everybody in this room, there's not many of us, there's only 60 of us in it, if we all went 100 lots long now, everybody at the same time and pressed the button, you wouldn't even see it. Because the volume in the $7 trillion that goes through this market every day, it takes a huge amount of money to move it. And this is why we're interested in these, because we know there's been a large volume of orders there, and we know that the market will come back to that area, because as soon as that move happens, somebody's caught offside. Those people will want to get back there. Those people are obviously big banks. There's 10 big banks that move the market. Yeah, 10 big players that have the power to move this. If 3 of them go long and drive it up there, there's 7 of them that can push it back down again. Yeah, they're always in conflict with each other, but they're always transacting with each other, which is why we get this, what we call balance. This is where the banks and institutions are happy to transact at a price until somebody isn't, and they go for a run, which is what we call price discovery. Price discovery either succeeds or it fails. Then we try price discovery again, fail. Now where are we going to go? And this is why you find the market returns back to previous areas of balance, because this is where we're happy to transact. What about down here? Nope, don't like it. What about here? Nope, don't like it. And you'll get propulsion gaps formed as they try to move the market to new levels. When that's rejected, the market moves back. This is why they get filled. That's it. That's propulsion gap theory in a nutshell. But there's another video on the website which basically explains that. So, and that's what the indicator does. It just shows you where those areas are. So you know where the market is potentially going to head. But as I say, you know, nothing is guaranteed. Yeah. So, you know, if you go this massive move here, so we had an RSI extension there, yeah? So if you got in short there and you wanted to play the long game, those were your targets to the downside. But you also had one there, yeah? So we got an RSI extension short there. Your targets would have been here, here, and here. They all got hit. In fact, this one got hit, but that would have taken you a month to get from there, 28th of March, down to here, 3rd of May. So the entire month of April, you'd be heading towards that propulsion gap. Right now, that one's filled. We got one there. We got one there. But the bigger they are, quite often you'll find the more difficult they are to fill sometimes, because these are institutional moves. When you get a big one, New Zealand dollar is a great example. When you get a very big one, yeah, this was the New Zealand dollar interest rate, and the market's selling the crap out of New Zealand when they didn't like the interest rate rise. Yeah. That's a big move. And there's a lot of money short. The power it's going to need to get back to that level is going to be substantial. However, everybody, every bank and institution that caused that move is now sitting on an absolute fortune of short orders on New Zealand dollar, US dollar. If they want to realize that profit on their P&L, they have to take the opposite side of that trade. So they sold here. So if they're going to get back the money and make the profit, they need to buy, which means they become buyers. And that's why the buy move starts, what we call the profit take move. So it's a push, extension on the RSI, profit take, back up to that area. When we get to that area, highly likely we'll start a new leg, market structure. This is why you find market structure works around propulsion gaps. It's all just market movement. So all you need to do to know where the market's going to go is know where it's been, because the market comes back to areas it's been before. It always does. Support and resistance works. Look at the pound yen. Look at what happened to that this morning. Not the pound yen. Yen? No. What was it? I can't remember which one it was. It was one of the RSIs, I think. Let's have a look at the Swiss yen. No. Something hit resistance. I can't remember what it was. You're in New Zealand? No. Pound New Zealand. That was it. Yeah. So pound New Zealand. So that's this blue line here is the previous month's high. Yeah. Rallied up into it. Bang. Off we came, because there's limit orders sitting there. The banks and institutions have got orders sitting at these levels because that's where they sold it from. How do we know they sold it from there? Because that's where it came down from. They sold it, obviously. That's why it came down, because they sold it. So they're selling it again. Unless there's more buyers than there is sellers, in which case then that sell will fail and it will become a buy. That's why support resistance works and why all these propulsion gaps work. So, this is why I have the confidence in the strategy that I have, because I know when we get there and we're extended and we've left propulsion moves in, that there's a high probability, as you can see by all these grey boxes that they've all been filled, there's a high probability we're going to come back. So if I've got propulsion gap targets like I have here, I'm short on this with 2 positions. I've got 2 whacking great propulsion gap targets here. That's a gap. So this propulsion gap target is actually that big. Yeah. I'm pretty sure this is coming down. I've no idea when, but I'm pretty sure it's coming down. And sometimes I might be in this for 2 to 3 weeks waiting for them to do it. Prime example here, look. Got in there. Target there. Didn't make it. Pushed up. Didn't make it. Pushed up. Bounced out of that propulsion gap. Yeah. Buy. Buy again. Second entry. Pushed up. Didn't quite get down. Pushed up. Yeah. Sold it there again. I knew it was coming down. I didn't know whether it would get there, or whether it would just get to there. But it doesn't matter, does it? It's coming down because there's propulsion gaps in place. So you get out where you want to. But obviously this one came straight down to there. I don't hold it that long. But if you want to, you can do. There you go. Make sense? Excuse me. Right. So your ORBs are lovely today. So your 5-minute opening range on the NASDAQ, big run. There's your 5-minute ORB on the DAX, on the Dow rather. Not as good, 1-to-1, pulling back at the moment into propulsion. So there's 2 things going to happen here. Either the guys that started this big buy here are going to add into their positions and drive it back away, or we're going to fill this gap and then see if there's more buyers than there are sellers. We don't know. But, look at how this is holding up here. So this is large. This is a large candle, big, strong propulsion move to the upside. Yeah. The guys that bought it here, sellers started to come in and they went, no, we're going long. They came in again. We went, no, we're going long. They tried again. We went, no, we're going long. Yeah. So this is what's happening here is they're hitting the bid, which is basically as soon as the market comes back, they're just adding more orders into their positions, which is why these propulsion gaps hold, because the guys that started that move there want to go long. That's why that was such a big move. They've dumped loads of money into it. If it comes back down below that propulsion gap, they make a loss. So it's in their interest to prop this up. And if they've got enough money to do that, they will continuously add. It's what we call an iceberg order. So they basically just keep adding to the order that they placed in the market in the first place until the sellers go, screw it, we're not going to make it. And then it pops. And then they take profit. And then it comes back down again. Which is why it acts as support and resistance a lot of the time as well. But not always. You don't know whether they started their move there, pushed it up to here, and now they've gone, right, that's enough, boys, let's take our profit. And if they're taking profit, they're selling here, which is why it's going to come down and just slam through that. You never know what's going to happen. You just know roughly where things are likely to get to. That's all you ever know. You can never tell what's going to happen next. Anybody got anything else they want to have a look at? Just catch up on the chat. Need everything to revert back to Sunday. We talked about that. Tim, John, the thing about Lee's indicators is that he's completely open with regards to the setup. So even if Lee disappeared, you could still trade a strategy. I'm immortalized on YouTube. So I'm not going anywhere. I just won't be doing live rooms. I think you've got enough enough to watch. So if you've only just discovered me, you've got 543 videos to watch, and they're usually around about 2 to 4 hours long. Good luck. Be there forever. Maybe if Lee disappeared, you could get some MT4 coder called D or Sri with a canoe to code them for you. Absolutely. The indicators I've built and sell are totally codable. I coded them. Someone else can. What's the longest you've waited? For what? For in a position? 6 weeks or so. The time that you're in a position will vary, but a squeeze. I mean, look at this one here on the pound New Zealand. So the entry was there, which was somewhere at the beginning of March, 2nd of March. The exit was there, which was the 4th of April. So that's a month to get out of that position. That's not unusual. In a squeeze, you'll be in 6 weeks or so if a market decides to squeeze you. But this is one instrument, yeah? We've got 28. So if you're getting squeezed on something, other stuff's working and making you money. It's rare that you will ever get squeezed on everything. Because to get squeezed on everything, everything's got to go completely the wrong way. And by definition, you can't have everything going the wrong way because you're on 2 positions in the opposite direction to start with. So if you had 6 trades on, guaranteed 2 of them have got to work out. So you never get squeezed on everything. And the market doesn't have the volume to squeeze on everything at the same time. If you were here this morning, we were talking about manipulation, and the banks work currencies at different times. So you can tell at the moment they're working the US dollar because the US dollar is moving. Yeah. So if the US dollar is moving hard, they are working the US dollar. So they'll be pushing the US dollar in the direction they need it to go. The rest of them, the euro, the pound, and everything else, will be fairly sideways because they're working the US. All the money is flowing into or out of the US. And yet that's why you'll find some crosses will push further and faster than others. And that's why we get ADR. Because the thing that they're working is what hits the average daily range. If you've got everything just not being worked and just having normal transactions going through it, we spend our time within average daily range. Like today, they're not working anything today hard because we haven't hit any ranges. So you'll always be in and out of something. But that's, this is the difference between this style of trading, the way that I trade and the way that most people trade with a stop loss. You want in and out. You want that instant gratification. You want to get in now and you want to get out and you want to make money, which is understandable. But there's no bank in the world that does that, because the banks on their own cannot control where the market's going to go. They know that. So they know that they have to be patient and wait. And that's what position trading is. You're just waiting for the market to do its cycles. Totally out of your control. So you have to be patient. If you want to be in and out and make money on a daily basis, you need to be a scalper. If you're going to be a scalper, you need to be a 10-year veteran expert trader with a massive bank account. Very few people can do it. I know one. It's just not really doable. But automation, it's doable, but it's a long-term edge. You know, everything has a downside. This style of trading has a downside as being drawdown. And every now and again, you'll sit here and you won't make money. You'll have a month where you'll just sit in drawdown for a month. You'll gradually hemorrhage 5%, and nothing happens. And then all of a sudden, boom, you make 15% in a week. Because this thing will go where this thing goes. And if you're in the wrong way, you're in the wrong way. You just have to wait. If you're not a patient trader, position trading is certainly not for you. Tomo, what's up, bruh? NASDAQ runs fine into ADR. NASDAQ. Yeah. NASDAQ's hit ADR. Big move. That one. So look at the ORB on that today. Absolute beauty. So your pre-market 5 is obviously there. Your pre-market 15 is there. Your 5-minute ORB is there. Doesn't matter what you took today. You've killed it. There you go. That's a propulsion gap holding. Yeah. So basically, when you get a big propulsion move by a bank or institution, the only way they make a loss is if it can get down below where they started the move. If they keep adding constantly around about the area they bought, sellers eventually give up. It's who's got the deepest pockets. If you've got a bank sitting here with 25 million long, and you've got a load of other institutions sitting here with 15 million short, it's going up. Simple maths, basically. Whoever's got the biggest bank balance drives the market in the direction they want it to go, which is why banks can't fail to make money, really, because if you've got a big bank with a big bank balance, you just keep pressing the buy button until everybody else stops pressing the buy button. By definition, the price will go up. Propulsion. Impulse. That's why it's called an impulse move. What should we do today, boys? Let's go long. Has it gone up yet? Yeah, brilliant. Sell it. That's literally what they do in banks. They just press buttons and make the thing move up and down. Market makers. So 125 ADR coming up on the NASDAQ. I would hold on to this. I wouldn't get out. Michigan's come out at 59, so that's positive US 10 minutes ago. So drop on the Michigan news. Just up and down today. It's just pointless today. They're not interested today. So the Figure request, big news, 3:30ish, didn't have much of an impact. We haven't got there yet. It's only 10 past 3. 1 bro, 0 gold. You just said it, Ryan. It's 1-1 now. We haven't looked at gold yet. Okay. There you go. Another example there. Accumulation, break, retest, sell. Didn't quite get to where we wanted it to. Sell it again. Another propulsion, accumulation, break. They're selling into it, look, but that propulsion gap's just about to fill. Pretty much is filled. So gold's stuck at the bottom at the minute. It does look like it's a short. So they're basically selling this low, which obviously is because of US dollar strength, but this US dollar isn't that strong. It's just not really going anywhere, is it? But look at all these propulsion targets to the downside. you'd have to say it's a short, but I don't know. It's just not getting anywhere at the moment, gold. Neither is oil. Oil's stuck as well. Totally stuck. We attempted that breakout on Wednesday, failed it yesterday. Starting to rally again. We've had a structure break back to the upside, but we are still really bang in the middle. This market is stuck at the minute. What's going on with the DAX? I don't know. Rallying at the minute, 150 ADR. So all the indices rallying. Don't quite know why that's rallying quite so hard. All markets are up though today. ADRs across the board on every market. There's no real news. We haven't had fear or greed yet, have we? Reasons for poor buying conditions for houses. Right. That's all I've got today. There's nothing else really to look at. If you're on the indices, well done. All the ORBs. Beautiful ORB on the DAX today as well. Short. Very nice one. All spiking in anticipation of the aircraft news. Yeah. Yeah. So 3:30 this afternoon, we have the news. I can't remember what it's called. So if you're funded with Fidelcrest, you're not allowed to trade this afternoon because we have some big news coming out at 3:30, which is the non-defense capital goods orders excluding aircraft. So at 3:30, basically, the market is apparently going to go mental, and you're very, very risky if you stay in the market during this news because the non-capital defense goods orders excluding aircraft apparently could bankrupt you. So be very careful at 3:30. Durable goods orders is what it really is, isn't it? Why include that? We've had durable goods, haven't we? That was 130. See, why don't they just call it PCE? It is one. It's durable goods. Look, that wasn't there this morning, was it? Durable goods. Did I miss that this morning? There's the non-defense capital goods orders excluding the aircraft, though. That was the fun bit. So this is out by 2 hours. How bad is that, right? So if you're trading on Fidelcrest, this is actually out by 2 hours as well. That news was 1:30, not 3:30. God, you've got to be so careful with these guys. It doesn't actually say list of high impact red news events. It's not a red news event. It doesn't appear on the calendar. All dates and times are aligned with the current broker time, GMT +3. But that's 2 hours out, not 3 hours out. Oh, they are really fishing for tripping you up, aren't they? If they call it PCE, we know where we are. We know what time PCE is, don't we? We don't know what time the call the aircraft parts are. Anyway, their server time, yeah. We are GMT +1 as it's British summertime, yeah. Broker time is so confusing. Broker time is GMT +2. We are British summertime at the moment, which is +3. Yeah. So they put the news at 3:30, which isn't either of those. Give up. I'm going to stick to brokers, to prop firms that allow you to trade through the news. Don't even have to worry about it. Forget it. If you're stupid enough to be scalping during high impact news, then you deserve everything you get, basically, if you're a news trader. This is really rallying, this NASDAQ. New highs on the session just gone in on the NASDAQ. Still going. And the DAX. 150 ADR on the DAX, 125 on the NASDAQ. S&P 100. Big moves. Quite sure what's caused this. VDEL is 1717 right now. Yeah, see that? See, this is the thing. That's UTC plus 2. Yeah, if their broker time right now is 1717, that's the same as mine. This is 1715. This is UTC plus 2. They're saying it's plus 3. No, it's broker time plus 2. It's so confusing. They are literally trying to trip traders up by confusing the crap out of them, which is a bit naughty, isn't it? They should just go by the Forex factory calendar, and they should basically tell us which one it is. Don't trade through PCE. Fine, I understand that. It's a red news event. Don't call it core durable goods, which is orange, and something to do with aircraft, which doesn't even appear as a yellow. They're just a con artist. In my opinion. And mainly I'm bitter because I failed the evaluation with them. But anyway. Right, I'm going to leave it there. I'm back on Tuesday. So at the minute, we're just waiting for everything to unravel. At the minute, we're stuck sideways. I don't think we're going to get any movement either way. We might get a sell-off towards the end of day today on the US, but I doubt it. I think we're probably just going to accumulate today. But obviously, there's a lot more downside potential on everything at the minute. So waited all week for that aircraft news. I know. If only I'd have known that they were +3, +2, and actually it was just PCE. See if I get paid next week. Yeah, go from there, Brian. Yeah, good luck with that. I think you will. They've been around a long time, Fiddlecrest. They're an established company. Then they're not. I don't think they're dodgy in any way, shape, or form. But I certainly know they've got some curveballs in the way, haven't they? So the rule about not trading the right lot size is the one that would really slip me up. So yeah, got to be very careful with them. There's much simpler prop firms out there. But hey, 2-for-1 deals. Can't go wrong. Right, I'll leave it there. Back on Tuesday, 750 and 220, obviously. I'm going to work on the EA more and get this working properly. I've broken it. I know I've broken, so it's not a problem. So yeah, I'll be working on that over the weekend at points, and then I'll retest it on Tuesday. And hopefully we'll have it all working tickety-boo then. So have a good weekend. If you need anything, I'll be in the Telegram group as usual, and back on Tuesday for Frankfurt at 7:50. So have a good one, and I will see you guys next week.